Right now, folks, we're going to jump over to our man, Steve Rhodes. And, folks, check out Steve's outstanding newsletter, Mastering Probability. You can find that right under the newsletter tab at TFNN.com. You hit that subscribe button, folks. You gain access to his newsletter for $149 for 1 month, $695 for 6 months, or $1195 for the year, saving as much as almost $593. And you get a 30-day money-back guarantee with all of those, folks. Come with, as we always say, talking just some tremendous webinars that you gain access to all of it. Steve Rhodes, good afternoon.
Hey, Tommy, like we talked last week, King is alive and well.
Oof, right?
Yeah. So, just if we take a look at what I've got on my screen right now are the three primary currency pairs that make up the U.S. dollar index, and that's the euro, the yen, and the pound. And the three of them together make up 83% of the weighting. The euro is 57%, and I forget it's like 14, 13%, whatever it might be for the yen and the pound. The pound is getting pounded. And the pound is actually in the process of forming an A to B equals CD pattern to the downside. Now, all three currencies are weaker this morning or this afternoon versus the U.S. dollar. But you can see we're taking out a TD9 count bottom pattern. We're taking out its swing point. This is the pound that we're looking at from July 16th. And then he closed below 133.64, gets us an A to B equals CD pattern to the downside with an initial price projection of 131. If that's going to take place, that's going to continue to keep strength in the dollar. When it comes to the yen here is moving up. It had a TD9 count top. It's trading into that swing point. That was from July 16th. If price closes over that swing point high, that's 149.18, that will trigger an A to B equals CD pattern to the upside. That will most certainly put strength in the U.S. dollar, and it's really going to be all about the euro. So in the case of the euro, I really don't have an A to B equals CD pattern to the downside that it can make. The reason is that its swing point from July 1st, when there was a retracement back into July 24th out there just a couple days ago, was kind of you were referring to and taking a look at the U.S. dollar index. It's just the opposite. It was too much of a retracement in order to be an A to B equals CD pattern to the downside. But nonetheless, if price takes out its TD9 count bottom, and that would be the swing point low from July 17th, we would be looking at a move back to the 114 area. That's its TD9 count breakout level. So, so those are the levels to be watching. It's better, I think, take a look at these three currency pairs to understand exactly what's going on with the U.S. dollar index. So, just wanted to be able to share that with you since you had covered that. Just
I like it, man, because, I look at the DXY and, and thank you for giving those details for those who don't know. The euro is a huge one, of course. And as you said, the yen out there and then the pound. And the pound, man, talk about breaking that B point, right? I like it.
Exactly.
Yeah. And boy,
doing it in a strong way.
Yeah.
That price is along the left side of that diagonal line. So at this moment, that's an even stronger move than the A to B line, which was just a down elevator. Is what it looks like to me. So
I was just going to add, Steve, even on the euro US dollar, it's great. I know that move remarkable when you see the difference even and quite a recoil, I guess, and then an explosion today. But it wipes it all out today. So that is some serious strength for the dollar, weakness for the euro, as in that move alone. Just my goodness, right on that chart.
Yeah, it definitely, can get worse out there. As far as overnight action, I'll see if something will populate on my chart, and then I'll get back to some of the stuff that I pulled together. I was taking a look at I don't think this is going to populate that quickly, but what I was, so I'll just share with folks. Okay, here it actually comes.
Nice.
So the 60-minute time frame chart negated a TD9 count bottom pattern, and it did that just kind of as we were coming on the air at 3 o'clock. And so that suggests that we should see 6402.75 for the ES Mini. If you go over to the very right-hand tab, I've got a 10-minute bottom pattern. But the way that the market is traded, the fact that the daily over here is below that green oscillator and change line, the fact that the 5 hours below profile support, the 4 hours below profile support, the 2 hours below profile, all those are suggesting we should see a further move lower. Now, that would just simply be a two-day move to the downside, potentially a two-day move to the downside. But what's nice about that, though, Tommy, is it kind of leads right in to what I wanted to chat about today with you and the listeners out there. And that was first, real quick synopsis. Here's a 97-year seasonal cycle. The red vertical line is where we're at today. Most people, are familiar with the sell in May. That's way back here. The sell in May usually bottoms towards the third week in May, and then we rally up. This over 97-year period, typically rally up into the early part of September. So that's one possible analog pattern that we're taking a look at. This is the 97-year seasonal cycle, the same thing that we were looking at, but only for the month of July. You'll see I just have July checked here. Now, the bias is really to the upside for the rest of the month out there. So just share that with folks. We don't know if price is actually following along this analog because there is the 97-year post-election seasonal cycle. This suggests right here that we would have a down day today and that we would rally into the end of the week or beginning of next week. August 2nd is typically when, during the presidential seasonal cycle, over the last 97 years, that means we've got 25 touch points. But really, Tommy, 2025 isn't really, so there's really 24 touch points out here. But that's pretty decent. Now, this is the analog that is following. As you can see, it shows that we should expect and anticipate that we move lower into the October timeframe. Before we do a bit of a rally, and it looks like maybe right around just after Thanksgiving, in the early part of December, we start to move lower. So that's that analog. So how do we know which one, if either of the analogs are in place out here? Well, one of the things we could do is first just start taking a look at the post-election seasonal cycle. Says we should top out late this week, early next week. Well, if we take a look at the S&P 500, again, this snapshot was taken maybe an hour and a half ago. We're in bar number 8 on the S&P Cash. We're in bar number 8 of the ES Mini. We're in bar number 8 of the SPY. All three of those are suggesting that a TD9 count top could take place between today and Wednesday. So that's close enough for me for our average work out there with regard to a potential top. So right now, this leans more towards the presidential cycle out there. The equal weighted ETF, the RSP, still has a top that's in place out here. So as long as that doesn't get negated, it would be a close above 187.84 out there. So what I then use, if we're going to form a top and if we're going to start moving lower into October, I really move over to the ES Mini versus the S&P 500 or the SPY because their profiles are better. So we'll use profile levels should we get that top to see if it's more than just a 2 or 3 bar move to the downside. Here is coming off the April low. Those blue arrows show you consecutive days to the downside. We've had one 4-day move to the downside. The majority have been 2 days. There was one 3-day move to the downside. So today's number 1 for the S&P to the downside, or the ES Mini. Tomorrow might be number 2, and that in fact could be a bottom. It could just be a 2 to 4 day pullback out there. So we'll pay attention to profile levels. We are trading above profile resistance as we speak right now for the ES Mini. That's at the 62.95 level, and everything looks. It's been very bullish market on a weekly basis, Tommy. We've only had 1 2-week pullback, and it was pretty minimal. That's it.
It's amazing, man. And, folks, check out just great information, Steve, the exact levels, the actionable levels you're talking about. Folks, check out Mastering Probability, and it is remarkable on that weekly, right? What are we up, 30? It was 4,800 to 6,400. I'm ballparking, folks. That's 1,600 points. Okay, which is 1/3 of 4,800. That's 33% that the market is up. My goodness. And Basil, I talked to Basil, of course, on a weekly. How are you going to have peaks when it never goes down, man? Which is just wild.
Exactly.
Steve, great information, man. Folks, check out Mastering Probability. We talk about the webinar. Steve's got updates in the morning, the afternoon. Steve, great stuff. We look forward to the program tomorrow. Have a great night, man.
Thanks, Tommy. You too.
Thank you. Folks, check out Mastering Probability. We'll be right back.